Good morning, traders. It's Peter Thompson, Senior Mentor of 1 Billion Signals, sponsored by Merit Forex. Such a week we got, guys. Definitely last week was very volatile. If on Friday there was a storm, obviously, and the majors dropped down. This is because of the US dollar recovery, and of course because of the FOMC meeting and the interest rates. We're gonna talk about it in about a minute. Just many people were asking me, are we gonna have a recovery to the upside, and when? It's a matter of time to see and to understand what first. But first, let's understand what caused this drop. On During the FOMC meeting, guys, the Federal Reserve Chairman Powell actually changed the tone from dovish to hawkish, which simply means they are not so confident that the inflation is so temporary as they tried to convince us couple of weeks ago. That's why they say there will be rate hikes, and they will start probably 2023, which is a big deal on the markets. But on the other side, bear in mind that not yet. So simply they're saying from before that was 2024, right now is 2023. So simply they see something that's not okay in order to start increasing the interest rates in United States. So that's why we've seen a very big drop of the major currency pairs. It's not because of the weakness of the majors, it's because of the strength of the US dollar. USD is pushed up last week, and I think in a very near future we're gonna see the US dollar dropping down again, because simply they cannot switch overnight just like this. It's a temporary movement. The dollar will continue going down, in my opinion, simply because they will continue printing money at least until September. So that's why we definitely can see continuation of the US dollar going down, majors going up. What do we got in the market? Monday retail sales, monthly basis in Australia, 1:30 a.m. GMT today, 0.1% red number for the Australian dollar. We're gonna see how it's affected the currency pair. Probably no major volatility there, but that's for Monday. President Lagarde is gonna give two speeches actually. Interesting, 12:30 and 2:15. Tuesday we got existing home sales in US, 2 p.m. GMT. Federal Reserve Chairman Powell is going to testify 6 p.m. GMT. Very important event on the market on Tuesday. So this is what can bring a lot of volatility. Wednesday we have composite manufacturing and services PMI, 8:30 GMT. Core retail sales in Canada, 12:30 GMT. New home sales, 2 p.m. and crude oil inventories, which is also very interesting chart. It's staying on the top, and the US dollar strength didn't affect much. The crude oil, 2:30 p.m. is the inventories on Wednesday. Thursday, we have interest rate decision in UK, Bank of England. Important event for the Great British Pound, and definitely gonna bring a lot of volatility. 11 in the morning, core durable good orders, 12:34 US. GDP quarterly basis, 12:30 in initial jobless claims, exactly the same time for US. Friday we have nothing, so let's take a look what is going on with the charts. We have in front of us your US dollar just smashed through the support level, 270 pips drop from the top the last couple of days, 3 days, Wednesday, Thursday and Friday. Absolutely crazy. But again, the question is this going to recover? Yes, definitely. We can see something very similar to this drop, correction, even further drop to the downside, then continuation to the upside. We do expect a strong correction to the upside, so I am not concerned about this drop. It happens, and we predicted it actually, because many times I've been notified you guys. I warned you, be careful with the US dollar because it can make a reversal. It's not a change of the trend, I have to say that a lot. It's still the US dollar is very weak. The Euro US dollar is having a lot of potential to go up. So for now, I'm going to aim to test 1.20, this level here. GBPUSD looks exactly the same, even though it keeps its uptrend and its strength. As you can see, the Great British Pound broken the support 1.40, broken the next one and the next one, and staying right now on 1.38. 38, which is a very important level for the Great British Pound, because if you take a look, it's a round number. We have very solid support here, so if we see bounce back from here, it's gonna be very, very solid. Australian USD, we got again, quick reminder, retail sales, a red number for the Australian dollar, but just 30 pips volatility. The traders are gonna wait a little bit to see how the market is going to react this morning, but the Australian broken very important support 0.7563, and because of this we can see 0.74. So careful by taking the buy trades on the Australian. It's the weakest amongst all the currency pairs right now. New Zealand USD, exactly the same, and I'm going to move this level to a new level, 0.6942, very important support level. For now, I am waiting the New Zealand to see how it's going to perform. It's not on my focus. USD Canadian, quickly go to the crude oil, and we're gonna talk about USDCAD. So still holding the top, 71.53. All the people are talking about the inflation, what's going on with the inflation worldwide. The experts are discussing the inflation, how big it's going, and on top of that, we've seen on Friday very big correction of the US dollar, but the crude oil is holding its top. Ignoring absolutely everything, the low demand, ignoring the still the problems worldwide, because definitely nobody can convince me that everything get back to normal as it was. But no, crude oil is holding its top, so this is what actually makes me even more interested to the crude oil, simply because once the crude oil unleash this how to say that, artificial push, artificial strength, definitely we can see huge drop to the downside. If we take a look USD Canadian, we're gonna see also that the USDCAD made its correction. We talked so many times about this correction that it's not enough. This slight upward push, it's nothing compared to the drop that happened, and definitely we can expect something like this. I gave you even a couple of examples with these bigger corrections than usual, like here. This is much bigger than this correction, of course, but still we've been expecting big corrections. So guys, you're supposed to be prepared, and it was kind of obvious. But if you're gonna take take trades on USD Canadian and USD Swiss and USD Japan, actually I'm going to hunt for short trades, and I'm planning to nail it big time. Exactly the same with USD Swiss franc. If you see 230 pips up push, no correction whatsoever on the US dollar in the recent past, and right now just big push to the upside, 250. I repeat, this could be temporary push, because anyway they haven't done anything yet. Yes, they say probably we're gonna reconsider our monetary policy, we're gonna reconsider our plans, but not yet. I mean, they haven't taken any action, which which I believe it's too early to start taking decisions based on this fact. They will do some rate hikes. And USD Japan didn't actually do anything on Friday. It's super interesting, absolute divergence compared to the other currency pairs. USD Japan is pushing down, so very good too. This is why actually people are diversifying their risk with Japanese yen. The total proof why the Japanese yen is considered as safe haven currency, and simply because in such a moment, as you can see, USD Japan is just not moving, and on top of that it's even dropping down. So it's very interesting week we've been expecting, guys. Thank you very much for watching, of course. Hope you enjoyed these videos. Subscribe to our YouTube channel, share us and like us on the social medias. This is how you help our channel. So have a very profitable week, and expect my video Wednesday. Bye bye.